Hey guys, Joe with Bitraged. So pretty much every eye is on Bitcoin right now. We're hovering at about 10,000, 10 to 11,000, and everybody's wondering, well, where to now? What's the next step? Are we going to drop below 10,000? Are we going to push through? So I want to talk about that a little bit here, and I wanted to talk about indecision candles and how powerful that can be. It's not something you should use on its own. Like, you wouldn't take an indecision candle and make a trade solely based off of that, but it is a good indicator of the sentiment of the market and where we might be headed. So let me show you that here. Turn back on our Fibonacci levels here. And the interesting thing about this is we're at 38.2% here, and we bounced off of that, right? And 38.2% is a pretty crucial level. It's a pretty important level on the Fibonacci scale. And so since we did bounce off of that and we didn't close above it, that is a good indication of the sentiment of the market at this point. So let's jump in here and jump in the 4 hour. So again, we bounced off the 38.2% level. I want you to notice these three candles here though. And this is a 4 hour chart. So this is 4 hours, this is 4 hours, and this is 4 hours. Look at that, and I want you to ask yourself, well, what's going on here in the market? These three candles are what is called dojis, and essentially what they are is indecision, right? It's an argument. There are sellers here, and there are buyers here, and nobody can make up their mind. And so it can be a sentiment of a weakening market, right? So if we look back here, up at the top of this run here. So we ran up to here, and we see this indecision candle, right? And then it falls off. Falls off right after that candle. And why that happened is because there was so much indecision at this level that bears took over. This is a good indication of a weakening market. And it did run up a little bit, and we tested this level here, but then we fell back off. When we fell back off a decent amount, it doesn't look like that much, but we went from 11,000 down to right about 10,100, right? So it fell off a pretty decent amount. Volume came in, sell volume came in. So let's jump in here and look at the 1 hour chart. So again, here we are. It fell off quite a bit, and a lot of sell volume came in. You could have predicted that by looking at the different time frames and looking at the sentiment of the market, and this is a good indication of the sentiment of the market. It's not a foolproof indication in and of itself, but when you see a run like this and then this much indecision, 3 4 hour candles marked by this much indecision, it's a pretty good indication that the sentiment of the market is weakening at this point. So a lot of people look at this and they say, well, look at this, we're up quite a bit. So we're definitely in a bull run. We're out of this correction. And they just look at the price going up and take that as the only indicator that we're in that market. What you have to understand is we don't have a ton of volume yet, right? So it did pick up a little bit here. Picked up a little bit, but back in here, we were still at about 20,000, a little less than 20,000, 24-hour volume on GDAX. So that's not a whole ton. We were down here, we were up at 100,000 or 95,000, somewhere around there, 24-hour volume. So 20,000 or 17,000 is not that much. Now, it did pick up. We're at about 28,000 here, but it picked up when we were pulling back. So the market is weakening, right? So essentially what we're looking for here with these Fibonacci levels is we're looking for price to close above this 38.2% level. So if it closed above this, and we've seen a candle close above this level, that's a pretty good indication that the sentiment of the buyers is still there, and bulls still hold control. So this is overall trend of the market, right? So we're still overall in this downtrend, in this correction channel, right? We haven't yet broken out of this correction channel, and that would be somewhere up in here. So between 11,000 and 12,000 would be the spot to break. And obviously this level here, 38.2%, is pretty crucial. We'd have to break that, break out of this to to even think about being out of this correction here. And a lot of people don't understand that. They just see the price going up and they think, well, hey, that looks great. I see green. We must be doing good. Another thing I want to show you here. Take a look back here on the chart. So this area right here. This area right here. So ran up quite a bit, right? Came from 12,000 all the way back to 17,000, right? Ran up quite a bit. And then we see this double top, and then it fell off. Looking at that chart pattern in the past, it kind of looks like we might be doing the same thing, right? So we could run up, we could come back, and then retest this before falling off. So looking in the past is a good indicator of what might happen in the future. History does repeat itself, and this is a pattern that you might want to look for down here if we can't break this level here. So a couple people commented on the videos and said, well, is RSI a good indicator to use? If we're in overbought, is that a good indication that we might see a pullback, a retracement to previous support? And yes, RSI is a really good indicator. If you look back here, we got into overbought in this area, and then we did see a pullback, but the overall sentiment was up. So it did pull back. It didn't pull back a whole ton. But we got up into here, and RSI cannot stay overbought for too long before we do see a pullback. And we saw that. So it reached overbought, and we went up to about 76. It pulled back here, and that's just consolidation. Ran back up and fell back off. It is a good indicator to use. You can couple these together and get a good idea of the sentiment of the market. One possible scenario you should keep in mind is this run up here could be profit taking. So what do I mean by that? People that bought down here, the smart money would have bought down in here, right? And a lot of people don't understand that either. We got a couple comments where somebody said, well, the institutions are just waiting to buy in. They're waiting to buy in up here. Well, institutions aren't stupid. So if you worked on a trading level at an institution, and let's say you bought this here, well, you could get fired for that. Well, why could you get fired for that? Because you should have saw this coming. And let's say you got caught up in the hype and you were like, well, we've seen a drop here and we're coming back up, and you bought up here. You bought up here and then you sold down here. Well, you'd get fired. You would get totally fired. Institutions are smart money, and the guys with a lot of money are trading smartly. They're not buying at the top and selling at the bottom. They're buying at the bottom and selling at the top. So what could be happening here is you have smart money here, the guys that ran this up, and the 95,000 24-hour volume that we saw, ran it up, and this whole thing here is just profit taking. So run up to here, take your profit, and then the market kind of collapses from there. So that's a possible scenario, and there is smart money in Bitcoin that know how to trade, and they're not going to buy up here and sell at the bottom, or they're not going to buy up here and sell up here. They're going to buy all the way down here, run the price up to here, and then sell. And we did get a comment where somebody said, well, once Wall Street gets involved in Bitcoin, then you're going to see it just collapse and these charts will go out the window. That's a statement made by somebody who has never traded anything in their life. The stock market is heavily manipulated by Wall Street, and you can use charts all day long and they work. Great. Forex market is heavily controlled, it's heavily manipulated, and it's one of the best markets. It's one of the biggest markets. The charts are great. They work. Getting Wall Street involved in cryptocurrency and in Bitcoin is not going to throw charts out the window. It's going to strengthen these charting techniques, because the guys at Wall Street, the guys at institutions, the guys that trade professionally and have big money and big institutions behind them know exactly how to trade. And they're trading off support, and they're trading off resistance. They're buying at the bottom and selling at the top. And so ultimately, I think that would strengthen cryptocurrency. So here we are. We're pulling back from here. We ran up and weren't able to really break 10,800 again. and now we're falling off again. So I would watch this closely. Since we didn't break this and this is such a crucial level, we could easily fall off from here and come back to 9,800. If we break 9,800, we're going to 95 and then 9 and then down from there, and you can read the support on the chart there. So that's where we are right now, and that's where I see it. Again, if you look, you back up and you look at a 4-hour chart, indecision here, indecision, indecision, indecision here. This is a huge indecision candle, and it's just a good indication that the sentiment of the market is weakening. We weren't able to even touch this long-term trend line and break out of this correction channel. We weren't able to break through 38.2% on the retracement levels, Fibonacci retracement levels, and that is a crucial level. That is something we should have saw if we wanted to see this continue. And so I would watch this closely. We got a comment where somebody said they watched our videos and they understood it, and they saw this run up to here, and they sold out right up at here within $3 or $3 or $4 of the top. And so that is just awesome. We love seeing you guys make trades that are successful and making money off those trades. We love that. And so I hope this helps you and you got some value out of this. And we'll continue doing these videos. We'll continue looking at charts and showing you guys our opinion of the market as we see it. Anyways, guys, that's going to pretty much do it for this video. I did want to talk to you guys about the market as I see it here today, and show you some indecision candles that might be useful to gauge the sentiment of the market and decide really what's going on and where the market might be headed next. So that's going to do it. Thanks for watching, guys. If you're not subscribed, definitely go ahead and do that. We got a lot of videos planned for the future. If you like this video, give it a like, comment below, let us know your thoughts on the market, and we'll see you guys next time. Take care.